Good morning, and welcome to Market Pulse 360, where we connect global macro, institutional money, and crypto, so you know not just what happened, but why it matters. Today isn't just another trading day. It's the final trading session of the month, and that makes it one of the most important days for investors. Around the world, portfolio managers, hedge funds, and institutional investors are rebalancing positions before a new month begins, often creating higher volatility and setting the tone for the weeks ahead. Overnight, the Federal Reserve kept interest rates unchanged, but markets viewed the decision as a relatively hawkish hold because policymakers continue to emphasize inflation risks. That means investors are now shifting their focus toward the next major U.S. inflation and labor market reports, which could reshape expectations for future Fed policy. At the same time, U.S. Treasury yields remain elevated. The Bank of Japan has maintained its policy while signaling gradual normalization, and geopolitical tensions continue to keep pressure on energy markets, reminding investors that global liquidity, not just crypto headlines, is driving today's financial markets. Despite this challenging macro backdrop, Bitcoin has shown impressive resilience. Instead of breaking lower, it has continued to hold key support while futures open interest has increased, indicating that professional traders remain actively engaged. Another encouraging development is the recent return of net inflows into Bitcoin exchange-traded funds, suggesting institutional investors are gradually rebuilding exposure after earlier periods of weaker demand. Ethereum is also benefiting from improving institutional interest, although ETF demand remains uneven across products. Together, these developments suggest that institutional confidence is stabilizing, even if markets are still waiting for a stronger catalyst. Market sentiment today can best be described as cautiously optimistic. Fear has eased, but investors have not yet reached the kind of excessive optimism that typically marks market tops. Instead, traders are watching every new economic release, every central bank comment, and every institutional flow for clues about where the next major move could come from. This is exactly the type of environment where disciplined investors often outperform emotional traders. As we close the month and prepare to enter a new one, pay close attention to institutional portfolio positioning, Bitcoin and Ethereum ETF flows, Treasury yields, inflation expectations, and upcoming U.S. economic data. If inflation continues to cool and institutional demand remains firm, cryptocurrencies could receive another supportive tailwind. However, stronger than expected inflation or labor market data could push bond yields higher again and create fresh pressure across both traditional markets and digital assets. The most important takeaway is this: today's market is no longer being driven by crypto news alone. Global macroeconomics, central bank policy, institutional capital, and market liquidity are all working together to shape Bitcoin's next move. Month-end positioning adds another layer of uncertainty, making the first trading sessions of the new month especially important to watch. The biggest opportunities rarely appear after every headline turns bullish. They begin while the market is still debating what comes next. Stay informed, stay disciplined, and if you want daily institutional quality market analysis backed by verified data, subscribe to Market Pulse 360. The market never sleeps, and neither does opportunity. I'll see you in the next Market Pulse 360.